Welcome back to the Dividend Diplomats YouTube channel, guys. You got Bert, the Hurt, and Lanny here, your boys at the DD, guys. We're going to talk about one stock that's down over 30%, yielding almost 5%. Is the stock too cheap to ignore? Let's find out.
Smash that subscribe button, everybody. Give this video a thumbs up. Help us get to 20,000 subscribers. We talked about last channel, even 19,000. We're going to eat some pizzas in front of all of you. Who doesn't want to see that, everybody? That's
Oh,
what it's about.
man, I'll tell you something, Jack.
That's right. So let's buckle up. Let's talk about the stock that may just be too cheap to ignore, everybody. Let's freaking go.
Guys, all right. So again, we already gave you a little tease right there that this stock is down 33% this year, down 28% since last year, yielding almost 5%, growing their dividend for almost 12 plus years. Pipeline's looking nice too, guys. We're talking Pfizer stock right now. We're in the pharma space. Ticker symbol is PFE. Long-term stock holding of mine going back, gosh, over 12, 13, 14 years. I don't even know at this point. One of my first stocks I ever bought. I've been buying them a lot. I own over 200 shares as well of Pfizer, putting that on record. Link below to our dividend stock portfolios in the description. But I can't remember. You own Pfizer as well, I believe.
Yeah, we've been adding a lot to it as well between my portfolio and my wife's portfolio. It's just one we've always liked. We've always continued to add. It's great. We're not up to 200 shares, but we have a pretty sizable position. I don't know it off the top of my head.
Yeah. Now, everybody obviously knows COVID vaccine, now that we're years removed from COVID, though obviously I know cases are, I think, skyrocketing right now currently in the world. And the vaccine season's coming up as well here, at least in the colder states here in, Northeast Ohio. But the impact that COVID had on the revenue in the beginning, and obviously on the other side of it is, hey, it's not going to be a forever type of revenue. You don't want it to be a forever type of revenue.
No, and that's what's unique about Pfizer in the pharmaceutical sector. So you have them, you spend so much money and so much of your cash flow developing these companies, and those patents and earning those patents are so critical, especially if you have a big breakthrough drug, because you get to enjoy the fruits of your labor, the billions of dollars you pumped into the research, the development, the testing, the FDA approvals, everything that goes into it is so capital intensive. You enjoy that period you have where you are exclusive on the drug, where you can just rake in some profits until the patent cliff happens, and then the generics start coming, which is what you're seeing with Humira and AbbVie as an example.
Yeah, you see that's the nature of the industry, guys. And I know everybody's fear right now is, oh, they're not going to be anything without the COVID revenue. And I think they've been planning for that. You would think that management's like, oh yeah, this doesn't last forever. If they aren't, then they shouldn't be there. But it's really about the Pfizer's pipeline that gets me excited. I know about the stock, and I know some may not like the industry in and of itself. So I understand that. If you own Pfizer, by the way, let us know in the comments. Like the video and subscribe if you haven't. But they currently have 90 total items right now in the pipeline, obviously among different phases, and we can show that on there. I mean, Bert, we're talking 29 in phase one, 28 different products in phase two, 23 in phase three, 10 at the registration marks of 90 total that are in the pipeline right now.
Yeah, and not all of those are going to get through. There are going to be issues with some where they spend all the money and it just doesn't go to anything new. But for the few that hit and the few home runs, that's what it's all about. You really are, for your baseball analogy, you're swinging for the fences in the pharma sector, and
Yeah.
that 90 in the pipeline is fantastic, because that means even if you get 10% through, that's nine huge drugs that can get them generations of cash flow, and that's what it's all.
I agree. And then, obviously the last earnings release, I think they were up 5% in revenue growth on X/slash non-COVID products, which is what you want to see. And management hinted at that you'll see more in this second half of 2023 as you go into 2024, as I think there were a lot of pharmaceutical products being released in quarter three and quarter four. And we'll show a nice chart here of of what was being kind of pushed out to the market over these, 6 months on the second half of 2023 to help support Pfizer and their revenue growth and overall goal to treat hundreds of millions of people.
Yeah, I'm smiling and I'm laughing because it's probably best just to show the chart instead of us trying to fumble through some of those names on there. Just
Yeah,
not gonna happen. You
no
get the
shame.
idea. You get the idea. All right, so that's the big story. Huge pipeline coming through. Non X revenue growth from non-COVID products is up 5%. Massive pipeline of drugs that are just about to come out, about to get released in the next few quarters. Here's the question though, are they too cheap to ignore today? And we're going to do that by looking and running Pfizer through our stock screener, where we have 3 metrics and a bonus metric: PE ratio less than the S&P 500, payout ratio less than 60%, history of increasing dividends, and that bonus metric, the dividend yield. So buckle up, let's go.
Woo, woo, woo. You know it, Bert. So, guys, we're talking Pfizer. Ticker symbol again is PFB. We're using the stock price as of September 8th here. I'm recording this on September 10th, guys, right after that Browns victory, hence Browns t-shirt. So guys, they're trading at $34.25. They're really getting down in the lower 30s here. Just when you think that 36 was the low point, 35 was the low point, they're actually into the $34 territory now. Hence why they're down 33% right now. So that's why it's very interesting to see if this is a stock to buy right now as you're investing here this month in September of 2023. Forward earnings right now, $3.30. That's looking like a nice low PE of 10, which is pretty common right now in the industry as the pharma space, as you said earlier, Bert, is just beat up.
It is. So let's look at their dividend, $1.64. That payout ratio is 49.70%. So perfect, right smack in the middle. It doesn't get any better than that.
Perfect payout ratio. I will mention though, and you'll see it here in that next metric, the dividend growth rate for Pfizer. They've been growing their dividends for 12 years, ever since the financial crisis. They even kept their dividend going strong during the Viatris creation when they split off the Upjohn with Mylan and created that separate entity. The rate's been a little low lately. I
Sure.
mean, they've only been doing it at 5% on average the last 5 years, and really it's been about a penny, I think, per quarter per share. So pretty low.
Yeah, but it's factor of the times possibly. Let's see that yield though. The yield is 4.79%. So if you're going to have low dividend growth, at least have a high yield to compensate for it. And you can see there Pfizer 4.79% yield with a 4% dividend growth rate. Not a bad combo when you put the two of them together.
Yeah, I mean, again, I'm expecting on top of that yield, you'll probably get around a 2 to 3% dividend growth this December, I believe, is the month they announced. So that's what I'm expecting right now.
Nothing
But I
changed.
think, yeah, but I mean, I don't know what your take is. I'll chime in that, I think once they come out of this, once the economy, hopefully improves a little bit, and some of these pipeline products start generating, I think you might see like the whole script flip again. But I don't know. What's your take though?
Yeah, sector's just beaten down. So there are a lot of great pharmaceutical companies. Now there's what, Johnson Johnson, Pfizer, BMY, Bristol Myers Squibb, so many great ones, AbbVie, which we talked about, like great companies, tough industry. If you have a position in a company like Pfizer, this could be a great time to continue lowering your cost basis if your cost basis is above it. And just keep nibbling, adding 1 to 5 shares at a time here. It's a great story. I don't know. That's kind of my opinion on it, and that's what the move I would probably take here as Pfizer. I wouldn't mind adding to my position, but I don't know if I'm going to start a new position in a pharmaceutical company. I don't.
Right. The 5-year average dividend yield's just at 4%, so they're definitely higher than that by about 80 basis points. Again, I own 200 shares. My position, is probably full. If they get into the 33s, I'll probably nibble a share. You know, yeah, it really just depends for me because that drip right now I have got is working like a
Yeah,
freaking horse.
that's a good thing. It's a good time to drip. So especially when you have 200 shares. So let us know what you think about Pfizer right now. Are you buying Pfizer stock? Are you optimistic about their pipeline, what we were talking about earlier in the video, or are you a little bit more pessimistic on the company and pharmaceutical stocks in general? Let us know down there.
Guys, if you haven't already, subscribe to this channel. Definitely give this video a thumbs up. Keep saving, keep investing, do yourselves a favor, and keep buying back your time because that's what Bert and I are doing. We are buying passive income producing assets, specifically dividend income stocks, to hopefully reach financial freedom. And if you're not with us, you're against us, Jack. That was Bert and Lanny from the DD, over and out.